Think about that. What other investment in a 2-year period would I be able to get, ultimately a 50% return on investment when you combine the 2 years? 1 year was better than the other, just full transparency, and then be able to sell that investment for more than I paid for it, right? That's leverage, that's power. And so an opportunity fund is saying, what wealthy do is they put themselves in positions to take advantage of market fluctuation, to take advantage of market cycles, right? And so an opportunity fund is saying, I'm going to put aside a certain amount of money into an account that is opportunistic, meaning I have liquidity, use, and control of that money. It's guaranteed. It will beat inflation over the long run. And when the market plummets, or when it corrects, when it tanks, however you want it, when it crashes, however you want to look at it or phrase it, you are going to be positioned and your money will be there, liquid, accessible, controllable, and guaranteed to not have gone down in value. That way, when everybody else is running for the hills, when everybody else is making horrible financial decisions, you're there taking advantage of the opportunity that is left behind. Hey, what's going on, cash flow hackers? It's Chris with Life 180, and for this video, we're gonna be talking about 5 ways that you can beat Wall Street returns. You got it with whole life insurance. Now, this sounds like a bold claim, but here's the bottom line. I always talk about the fact that if you look at the long-term results inside of Wall Street, they're overly inflated. I think, I just did a video the other day on 401ks, right? Talking about the history of 401ks, how we need to rethink the results in 401ks, and people who are actually huge advocates, who are founding influential people when it came to getting 401ks instituted in this country, are regretting the fact that they did it, because they self-acknowledge the fact that their expectations around results of performance of 401ks and the investments inside of them were just not realistic. And that was at a 7% expectation. And so, we have to look at the fact that we have these things in our mind for reasons that just are not in play anymore. But what I want to do in this video is I want to go through, regardless, let's just say that your long-term expectation in a 401k is anywhere from, let's just call it 10%, which is just astronomical and not realistic. But I'm going to give it to you. I'm going to say, let's go for 10% in Wall Street, in stocks, in mutual funds, or whatever your drug of choice is when it comes to the Wall Street gambling machine. You could choose whatever you want to do, but we're going to beat it. We're going to beat 10% with these 5 investments utilizing whole life insurance, and I'm going to tell you how, and I'm going to show you how you can do it with less risk to help you get where you want to go. So here we go. So the first thing that we're going to do is we're going to create an opportunity fund. Now, I talk about this a lot in a lot of videos because I think it's the foundation of everything. What we need to do first and foremost is you need to create an emergency fund. A lot of people think about it from the perspective of, we all kind of know we need to have 6 months of income, kind of sitting income or expenses, depending on who you talk to, sitting in an account that you have access to in case of emergency. That's kind of a rainy day fund. Dave Ramsey made that really popular in his baby steps, for getting out of debt and going through his whole process, right? And so when you look at that, an emergency fund, everybody knows, that they need to have that in their life. But very few people think about an opportunity fund. And an opportunity fund is the idea of saying, well, I guess let me put it to you this way. Robert Kiyosaki always says savers are losers. Why does he say that? Because the idea of just putting your money in an account, giving up control of that, having it grow for you over a period of time, all while you have no control over the variables that actually lead to success inside of that account, just makes no sense for anybody with any kind of ability at all, right? And so an opportunity fund is saying, what wealthy do is they put themselves in positions to take advantage of market fluctuation, to take advantage of market cycles, right? And so an opportunity fund is saying, I'm going to put aside a certain amount of money into an account that is opportunistic, meaning I have liquidity, use, and control of that money. It's guaranteed. It will beat inflation over the long run. And when the market plummets, or when it corrects, when it tanks, however you want it, when it crashes, however you want to look at it or phrase it, you are going to be positioned and your money will be there, liquid, accessible, controllable, and guaranteed to not have gone down in value. That way, when everybody else is running for the hills, when everybody else is making horrible financial decisions, you're there taking advantage of the opportunity that is left behind, right? That is when you look at the world of the most wealthy people, you can just, I'm telling you, just go online, do some research. This one concept of building it as an opportunity fund, and stop thinking, if you look at a decade-long period, remember, people way overestimate what they can accomplish in a year and way underestimate what they can accomplish in a decade. So if we think about it in terms of a long-term view of a decade or longer, and we say, listen, I'm not trying to just get that 15% return this year, or 8% next year, or 10% the year after, or 20%, whatever it is, because it doesn't matter what all that goes. I mean, talk to all the people that had their 401ks run way high in 1980s and the 1990s, and then have the dot-com crash, and then the real estate bubble in 2008. Those two bad years wiped out virtually 20 years of gains, right? That's how these things go. The people who were not worried about trying to get the 25, 30% returns during the dot-com bubble, the people that were sitting back on cash that was liquid, accessible, controllable, and guaranteed during that time are the people who ran to the bank, cashing checks, buying assets at depressed values, and then riding the wave all the way up. Remember, you make money when you buy. We are at the end of a 12-year bull market, or I can't say we're at the end, but we're certainly near the end. We're closer than we were last year, right? To the next bull market being over. And when we look at this, think about it this way. Think about it seriously. Every 8 to 12 years historically, we've had a market correction. We're 12 years into the greatest bull market we've ever seen. So how much sense does it make to buy assets at these inflated high levels when you have an opportunity to position yourself to take advantage of the next correction? To me, that's a no-brainer. That's where an opportunity fund comes in. And I say that's why I put this number one, because building an opportunity fund is one of the most important things I think that people can do right now. Now, what I'm going to do now is I'm going to get into a couple other options, and those are businesses that you can utilize, because if you understand anything about whole life insurance, when you structure it properly, implement infinite banking, if you will, you can utilize whole life insurance as a savings vehicle to then invest in alternative assets and alternative strategies. You can utilize it to capitalize businesses and so on and so forth. And so I want to talk about a couple that I've looked at, a couple that I've done, and a couple that I know people have utilized very, very successfully, and hopefully give you some inspiration on what you can do to hit the next level, because I have no delusions about this. I do a lot of videos. We talk a lot about some big numbers, and we talk about people dumping in hundreds of thousands of dollars into policies and having premiums, forced savings plans of tens of thousands of dollars per year. And I realize that the overwhelming majority of the people watching this video just simply can't afford that. So what I want to do is talk about a scalable model that can get you where you want to go, and this will make sense. So the first thing I want to talk about is Turo. Now, Turo is, if you're not familiar with Turo, it's actually pretty amazing platform. Think about it as the Airbnb or VRBO of auto rentals, right? So what you do is you can go out and you can save up into in your whole life policy, and rather than having to save 70 or 80 or 90 grand for your down payment on a house, so to speak, for a turnkey real estate property, you save up 15 or 20 grand for a car rental, right? Like for a car that you can buy, that you can rent on the Turo platform, and you can cash flow it. Right now, this is not going to be passive. You're going to have to run a business. Maybe you have a partner that can help you with it. Maybe you and your spouse can do it together. I don't know. This is something you have to kind of think about. But what I do know is that I've seen people, I live in Phoenix, so I guess every market's going to be a little different, but I think most people live in markets where Turo exists and where Turo would be profitable. What I would suggest is go to Turo.com, check out and see if Turo is if what they have for cars, what the rental rates, it's all very market driven. But what I do know is I've talked to people that have, and my wife and I have utilized this. So I've never done it full time, just full transparency. But what I have done is we spend a lot of time, at least up until last year when COVID kind of made it so we had to stop doing this. We would spend the winters and most of the year in Arizona, where we have our primary home, where I'm filming in my studio now. And then we would spend about 4 months of the year when it got really hot in Arizona. We would go back to Vermont and we would spend it with family back in Vermont where it was cooler. Now, when we were gone, we'd hop in the Jeep, we'd drive everybody back to Vermont, long road trip across country, but we'd have our kids and I wanted my Jeep and just for fun and all that stuff. And we'd leave our Denali here in Arizona. And when we had our Denali here, it was just sitting here. So I had one of our neighbors who's a friend manage it for us. So I would have our car up on Turo, and I can tell you that the money that we made just in a couple months that we were gone would virtually pay the car payment for 3/4 of the year, all at a cash flow, all renting it on Turo. So if we were to do that full time, I know it would have been profitable, right? I just know, because remember, when we were gone in Arizona, it was like the hottest, nastiest, worst time. Tourism was way down and it was still working out really well. So while I've never done it full time, I have talked to people that have made, I'll tell you, 25 to 30% a year cash flow on their cars. And I can tell you that those numbers make sense to me based on my experience. Now, the next thing I want to talk to you about is outdoorsy. Now, the thing I love about this is that you can utilize your whole life policy to get yourself into investments and businesses that are a blend of lifestyle and are a blend of getting a return on that investment. Like thinking about what is the return I can get, but what is the potential to add to my life and enjoyment along the way. Now, outdoorsy, I've talked about this before on the channel. I do this. I bought a Black Series Patron trailer that I love, by the way. It's amazing. I pull it behind my Jeep. The kids love to go off-roading. We love to go camping in the summer. Now, like last year, I did it 2 years ago. We got this trailer because when we got stuck not being able to go to Vermont, I was tired of cooking alive here in Arizona. It's like hell on earth. And so what we would do is we'd hitch up the trailer to the Jeep and we'd hit the mountains. But then what happens is other times of the year, we're busy. We got kids in soccer. We can't go camping all the time. So I would then put this trailer up on Outdoorsy, and I would rent this trailer out. And I can tell you the first year that I rented this trailer out, I was able to enjoy it. I was able to take, I'm going to tell you, 7 or 8 weekends away with my family and enjoy camping and everything. Because of the fact that I bought the trailer through my policy loan, I was able to have cash and go to the dealership and say, hey, listen, I negotiated a $30,000 trailer down to $19,900, brand new, by the way, brand new. And it was all because I had the leverage of access to capital, where other people are just negotiating interest rates and getting just taken to the cleaners, right? And so I was able to cash flow this. So remember, I paid just under $20,000 for this trailer. I was able to cash flow over $6,000 in my first year, right? So that's almost a 30% cash on cash return on that. Now, if I wanted to sell the trailer now, the cool part is, which I'm thinking about doing, by the way, because I just want to turn it over and a lot of things going on in our family, I could literally sell the trailer right now for more than I paid for it. And so think about that. What other investment in a 2-year period would I be able to get, ultimately a 50% return on investment when you combine the 2 years? 1 year was better than the other, just full transparency, and then be able to sell that investment for more than I paid for it, right? That's leverage, that's power. And while, the number 4, the next thing that I would talk about is turnkey real estate. That's how you can utilize your whole life policy to get there. Now, to create financial freedom, to create better returns than Wall Street. Now, here's the deal. I know that is the mecca kind of to get to, for turnkey real estate is the mecca because it's going to give you cash flow. It's going to give you tax benefits. It's going to appreciate. You can leverage it. There's so many things you could do with it. I talk a lot about real estate in my book, Cash Flow Hacking. And if you are interested in it, check it out below. Also, make sure you subscribe and hit the bell. That way you get notified every time I launch a new video on these kinds of topics, because I'm talking a lot about, cash flow investing right now, and utilizing the stuff that I'm talking about is some of the most important topics that you can understand in regards to personal finance. But turnkey real estate, while it's the number one kind of like the mecca of desire for people to get to, Sometimes you just can't afford it right away. So you got to work a little bit more actively, right? Through things like Turo and Outdoorsy to get there, right? And then you can, as you capitalize your account, you increase more cash flow, you build other businesses. Now you're going to be able to get to that desired result faster. Now you can get your turnkey properties, you can get all those benefits, and you can compound that growth. Now that is it's really key to understand that. Now, the number 5 thing that I think is really important, I started off with building an opportunity fund because you got to understand the importance of this. And that's why I spent so much time on the concept of an opportunity fund at the beginning. And then now the middle 3 are Turo, Outdoorsy, and turnkey real estate. Obviously you can stagger, and depending on whatever income level you're at, you can do any of those. I promise you, within a year or two, anybody can get to a place where they're successfully creating cash flow extra, beating the stock market with any of those things. And then the 5th way, I think, is if you're running a business, utilizing your whole life policy to have a capital reserve account for your business. Because just the way that you make major capital purchases, equipment purchases, being there to avoid interest expense, being able to set yourself up so you avoid the leaks in your financial life when it comes to your business and some of the inefficiencies that come with not having your financial foundation built properly with your business. Having a whole life policy there as an opportunity fund and a protection fund, a capital reserve account for your business it's just, honestly, it's kind of a no-brainer. When you look at the benefits and the value of this, I would say it just makes sense. It's just the math, it's a 4-letter word, math, right? And a lot of people don't like it, and it's kind of geeky, but it just makes sense. So once again, I'm going to go through the 5. Build your opportunity fund. You can use a policy to participate in Turo, buy rental cars and build a fleet of rental cars if you wanted to, create more cash flow, beat the stock market that way. Outdoorsy, invest in in a fleet of trailers, or 1 or 2 trailers, or whatever you want, and enjoy your life along the way. For me, that's a big thing, like enjoying your life. Turnkey real estate, this could be either long-term rental or short-term rental, like an Airbnb. And if you go Airbnb, once again, it's a lifestyle thing. You get to have it, and you can enjoy it, and you can rent it out. The one thing I want to make sure that you understand is if you do the short-term rental, if you do the outdoorsy thing or an Airbnb style kind of setup, make sure you don't just do it for the lifestyle, because then it's a lifestyle expense. It's not really a cash flow thing. I say look at it first as a business, and if it benefits your lifestyle in the back end, fantastic, it works out. And then the last one is building capital reserves for your business. That way you're more insulated, you're more protected, and you're able to take advantage of more opportunity. It's kind of like an opportunity fund, but just more with your business in mind. So anyway, I hope you found value in that. If you did, please hit that subscribe button once again, hit the bell, that way you get notified every single time we launch a new video. And anyway, if you have any questions at all, go down below, comment in the comment section below. I do my best to engage with every comment. And till next video, have a blessed, inspirational day, and we'll talk to you then. See ya.